Hello and welcome to the Ended Up in Vegas podcast. I'm Nikki.
I'm Megan.
Today we're going to be talking about some personal experiences that we hope you will leave some non-judgmental space for us to share with you. Tomorrow is International Women's Day, and in honor of that, we're talking about women owning homes, which we both do.
Yep.
We have both purchased homes out of divorce, purchased homes I did as a teenager.
And I did too when I was in my early 20s.
Yeah. So first, what was the first state to allow a woman to own a home in her own name?
Ooh, that is a good one. I don't know if I could know the answer to that.
Yeah. The answer is Mississippi.
Wow.
Yeah, surprisingly. In 1839, Mississippi became the first state to allow women to own properties in their own names. And then 9 years later in 1848, the Married Women's Property Act passed in New York, and that became the model for property rights for women in other states. Okay. In what year did women no longer need a man to sign for a home?
I'm going to say somewhere in the late 1800s.
So 1974, we're coming up on what? We're coming up on not even the 50th anniversary of a woman being able to buy a home without having a signature of a man.
That is so crazy.
So that passed with the Equal Credit Opportunity Act. So before that, banks required single, widowed, or divorced women to bring a man along to co-sign on their credit application. And that was regardless of income.
Wow. Things sure have changed a lot.
Yes, very much so. Okay, so how many single women in the U.S. own homes today?
I might have seen something about this recently. I'm going to say somewhere between 10 and 15%.
So the actual number is 17% of women.
Wow.
So this is specifically single women, and that compares to 9% of single men. So this, the highest share, by the way, did you purchase a house in 2006?
Yes, but not as a single individual.
Okay. So the highest share of single women buyers was in 2006 when that number stood at 22%. Wow. And I bought a home in 2006 as a single unmarried woman too.
So I bought my first house in 2005 as a single unmarried woman. It was a townhouse really, but yeah, very close to that.
Yeah. So what was do you remember your interest rate on your first house?
Yes. So it was, I think in the high fives. I want to say it was 5.8, 5 and 3/4, maybe 5 and 5/8. It was, but it was not just a fixed rate. So it was an 80-20 mortgage. So 80% of the mortgage, it was so that you could do 100% financing at that time. So I think 80% of it was at 5.875. And I think there was a second at somewhere around 9 and a half.
Yeah.
And then we sold that property a year later and bought a house. We had gotten a dog, and the townhouse didn't have a yard. It was like the D.R. Horton ones that are above the garages. So just kind of like a Romeo and Juliet balcony. Yeah. 1-car garage. And we realized very quickly that we needed a yard. So we immediately went into contract and bought a house from Kimball Hill, who's no longer here. And then that rate was higher.
Yeah, I had a 5-in-1 arm on my very first condo that I bought in 2004. And it was funny because I bought the condo from a guy who I was seeing. His dad and stepmom had gotten a divorce.
Okay.
And they both bought condos in this neighborhood.
So where is this at?
It was on Wigwam and Eastern.
Okay. Yeah.
And it's actually still one of my favorite floor plans because it's technically it's a 4-bedroom condo. So it was a 2-story, it was a 3-story building, and the top level you had an upstairs in. Okay. So the primary and 1 bedroom was down on the first floor, and then upstairs in the unit there were 2 bedrooms. Technically they had openings to below. So it was but they both had doors on them. So I just converted it and put a closet in one and set up, bedroom and then an office in the other one. But it was 1,500 square feet.
That's big.
Yeah, it was huge. And I was 19 and had a dog. So I had plenty of space in there.
That's roomy. I think it's bigger than my house now.
it was a good setup.
Yeah.
So, I think I had a 5-in-1 arm that the regular interest rate was probably like in the 5s.
Okay.
And then I think the APR was like 7% something, because once you added all of the fees of like the first time home buyer and, probably all my mortgage insurance that went into it.
PMI on that?
Yeah.
So how does I've never done an adjustable rate mortgage personally. I mean, obviously I've had clients who have. How does that work? So you have a fixed rate for 5 years?
And then it's like a tiered structure after that. So it will go up and it goes with the market rate too. Right. So it can only go up a certain percentage every year after that. Yeah.
Okay.
But they give you a whole what it's going to be. So you either need to sell the property or you need to refinance after 5 years.
I think those were really, really popular in the early to mid 2000s.
Yes. And they were a really bad idea for a lot of people who got into too much debt with them.
Yeah.
So when we're talking about women owning homes, I think, the thing that I don't know how to say this, but I hope that the number doesn't go up. Of the statistic of single women owning homes, because I think they're getting the information for that number from how you take title on your home.
Okay.
So as a 19-year-old, the one thing I wish that someone had better advised me on was how you're taking title. Obviously, you don't think of passing away or having something like that happen to you when you're young. But if I put a substantial amount of money. I put $20,000 into my first house. So that would basically be lost if I had been killed in a car accident or whatever. So, and I think 3 subsequent houses after that were all taken without any kind of trust or will in place. So how you title your home, if you're buying a home as Nicole Pucci, an unmarried person without a will or a trust, is that your home goes into probate when you die. And so I'm hoping that maybe we can start educating women younger who are getting their estate planning going and their wealth structure, like they probably have a 401k from a job, or a car and a house and a dog or whatever. You want to know where those things are going afterwards. So title is so important, because it will tell what the next steps are in case something happens to you.
And admittedly, I don't have a trust set up. It's something that it's always I need to take care of that, but it always seems like there's other things that are more pressing. But it's something that I thought about over the holidays. If something happens to me, I have minor children, I really need to think about some of that. So obviously we understand probate, so if you have a will set up, even if you don't have a trust, it still goes into probate. Interesting.
Yeah, so, even with a will. So that's why a trust. I'm not an attorney, so don't shoot me. This is just our podcast where we're speaking casually to each other. But from everything that I have learned and know about wills and trusts and probate, and from the experience of my dad passing away and having to be the executor of his estate, there are certain ways to circumvent probate, but a will is not necessarily one of them.
Interesting. Yeah, because wills can be contested, right? And it can be delayed. So, so that's interesting. So what would you say in regards to getting a trust? Because I think it's something most people, especially young women or young people, think that's something I can worry about later.
Yeah.
And I'm not that young, but.
Well, and so that's where Nevada is great, because we have a deed upon death. So you just file it with the county. We had an attorney help my dad to do it because he actually didn't die with a trust either. He did have a will, and we were able to avoid probate. But that is because he individually set up every single account and piece of title. So I was on his title for his car. And then I was the beneficiary of his deed, the title on his home, once he died. So I had to just go down to the county, show them his death certificate, present the deed upon death, and then they transfer it. There's no tax. And that's another benefit when you sell, even if you sell your home to a family member, certain family members are exempt from tax, from the transfer tax.
I have a client, her brother unfortunately passed away in June, and everything was already set up. Their bank accounts, everything was already set up. So she was the successor trustee. She had the death certificate really quickly. We had the house on the market within, I think, 30 to 45 days of him passing away. and everything was really seamless. We didn't have to go through attorneys. Things didn't have to get delayed. She just got the paperwork. We handled the transfer. And granted, I am not an attorney, so I kind of walk very carefully around those things, but it was a very seamless process. And I think because they had set everything up ahead of time. So
yeah. And I think that's just the one piece of information that I find now at, 37 is so important that my 19-year-old self wasn't told.
No.
And I think that title will tell you we'll speak with an attorney, because yes, it is based on your specific circumstances. But again, if you're putting substantial amounts of money into a home, all your belongings are there. I had my dad bought a lot of jewelry, bought me a lot of jewelry. So I had possessions that were important to not be, taken into an estate. So as you start to accumulate things in life, not everyone tells you as a woman, you need to protect yourself. Yes. You need to establish XYZ so that these things get passed on in the order and manner in which you want.
Yeah, just following your wishes so that you have some say over how things are done. And I see that a lot when there's a family situation and somebody passes away. There's a lot of fighting over belongings and who's going to get what. And if that's not resolved ahead of time, you sometimes leave things behind for your family to have to deal with, and they have to figure out what to keep and what to dole out. So if you can make those decisions for somebody ahead of time, it's really beneficial.
Right.
But it's sad to say I've seen a lot of families fractured over those kinds of things. So if you can prevent that by kind of being clear about what you want up front, I think that's really beneficial for everybody.
Yeah, I agree. Also, another component of this conversation is talking about divorce. We've already mentioned death, so let's just get all the D's out right away.
Yeah.
But we've both sold homes in divorce.
Yeah, and I think there's a common misconception that you have to wait for the divorce to be finalized to sell your home. That could be the case if you've already filed.
Yeah.
But when I was going through my separation with a little bit of resistance, I was very clear, we're selling this house and we're going to split the proceeds. And it was really easy. So I bought a house, he bought a house, we hadn't filed yet. And as long as you're in agreement about the way the proceeds are going to be split up, you don't have to wait for the divorce to be finalized to sell the house and buy your own property. We just each did quick claim deeds on each other's homes. And it was really seamless, and especially even at the very end when everything was finalized. We had finalized every financial thing and agreed on everything. It made that part of the divorce much easier.
Yeah, mine was similar. So I own my story. It's not a fun one to tell for me, but I got divorced in 2016, and I was in the process of actually buying a short sale during the divorce and selling our marital home. So the same thing, I purchased my home with a quit claim, and then 5 months later got remarried to the same person. So now, that home was actually taken title as in my name as a married person.
Okay.
And so up until my trust was created and the home is now held in trust, it was that way. But because Nevada is a community property state, the quit claim was then negated.
Really?
By, the marriage again, because I got married again. So
Do you think that could have been resolved either with a prenuptial agreement or a postnuptial agreement maybe?
Probably.
Yeah.
I mean, had I been smarter about it, I would have probably asked for one of those. But, I think the mentality that I came out of my marriage with was that I was starting over. I bought a substantially smaller home just around the corner. The things that we do as women and mothers to keep kids in the same school district or to keep them around their friends is all the things that I did. And at that time also, I was kind of weighing what my whole financial picture was going to look like. So having, I actually had a conversation with my dad because he's like, why don't you just get a little condo? And I am like, I am not going back that far.
Yeah, no.
I owned a condo when I was 19. I am not going back.
Well, and I'll be honest, I don't think for most people a condominium is the right, if that's what you can afford and you want the low maintenance aspects of a condominium, I actually don't think they're the best investment.
No.
Because you don't have as much control over your utilities, insurance. You're paying a lot in HOA fees.
Right.
that's right out the door initially.
Yeah.
And you don't really own the structure. You basically own the air inside the walls. Whereas if you own a townhome or a single family home, you own that portion of the structure. You often have a yard. I think for investment purposes, a townhome over a condominium is a better investment pretty much any time.
Well, for sure. And for someone who has animals, I mean, having a dog or 2 dogs is not really great when you're living in a condo. So, and then at that time, so the second divorce happened 5 years later, and I had to fight for that home. And so it's no fun.
No.
But I was for sure, like, I dug my heels in, and that was the home that I had purchased coming out of the first divorce, same person. But I dug my heels in that I was going to keep the home, and I was going to keep everything that I had put into the home, and that it was mine, and I did. And so I think that some of, my, the characteristics that I hold for, being a, probably critically called an alpha female comes from that experience because, I talk to women who are like, oh, I'm going to, wait to, see how life progresses. I want to get married. I want to have children. And I'm like, no, you don't have to wait.
No, you don't have to wait. You shouldn't wait because you don't know what the future holds.
Exactly.
And I'm really grateful. My mom raised me to be very independent. And from a very young age, she instilled in me, get an education, be independent. You don't ever want to have to be financially dependent on someone else. And so, my grandmother, my mom both worked in banking. And so there was a lot of like financial education on some of those things, investing. And I'm really grateful for that because it really instilled in me. I was very ambitious from a young age, working, saving money. I would say I'm more of a spender than a saver, but just like I knew what I wanted and I always will go out and get it. And I can thank my mom for that.
Yeah.
Don't wait for maybe or someday. It gives you a lot of self-confidence and it's just nice to know that you can kind of pay your own way and you don't have to be dependent on someone else. And I think that gives a sense of confidence to a relationship and even to a man coming into that situation that they know that it's not even about like, I don't need you, but it's like, there's not as much pressure on them to provide, I think.
Right. Well, and I've, on the contrary, I've seen men purchase homes too, like big homes who want to, marry and have children.
Have a family,
And I think that that's also part of manifesting what you want too. And so you just move forward without, thoughts of, well, if this goes this way, you just move forward with the best choices that you can with the information that you have at the time.
And that's what I would say to you as far as like the decisions that we all make. We make, I heard something recently. It was a quote from this incredible therapist on Instagram I follow, but it's like, don't use today's information on your past self. So we do the best that we can with what we know, and we just keep moving forward and we learn from it. Yeah. I think that's really been a useful thing for me.
Yeah. Well, and I also think back to, prior to the second divorce is when the pandemic started and interest rates fell. And I was like, okay, I want to refinance the house because at that point, I'm getting real financially aggressive with being, reducing debt and all of those things. And I took that into account, by the way, when I got the first divorce. I was like, you know what? I'm downsizing. I'm buying a house. I'm not buying a condo, but I'm like picking the middle of the two options, a 2,800 square foot house that I don't need all of these bedrooms. I don't, and I can reduce my debt. I think I reduced it by $50,000. The mortgage payment actually went up a little bit because I had mediated the prior home during the recession. And so, long story short, when I got to the pandemic, I started to investigate what the actual interest rate would be on like a 15-year loan to reduce the debt and then try to get it down to the same payment. And at the time, the lender that I was talking to said, you need to put him on the loan to qualify for this. And I was just like, I don't want to do it.
Yeah.
And so I just kept procrastinating it because I knew my name was on that loan. My name was on that house. And that was my, one grip on, subconsciously, because I knew it wasn't going to pan out the way that I wanted to. Very quickly after I remarried him, I realized that.
Well, and I think because I was in a very similar, when we first separated, the divorce wasn't even on the table yet. So I made a decision. That's why we bought our own individual houses. I was very clear, like, even if we get back together, I'm going to own the house because I want to be in a position where the kids don't have to be uprooted. I don't have to be uprooted. I really want to be in a position where I don't want to say I'm in control, but where I can maintain stability for me and the kids. And so for me, it was a big priority to maintain stability and to also have something I could afford really comfortably.
Yeah.
So that's why I bought a really small house. My ex kind of laughed at me, but my house is just under 1,400 square feet. And it was perfect, but I wanted a 1-story. I wanted a big yard. I wanted amenities, and I got all of that. I had to compromise a little bit, but I was really conservative in what I purchased. And like you, there are times where, like, gosh, I wish I had done a 20-year or a 15-year loan when rates were lower. I wish I had refinanced. I look back and think, but I kept putting it off. And then the pandemic hit, and then I was in a position where, newly self-employed, and, you have to have 2 years of self-employment history. Yep. And so I'm like, gosh, I wish, like, the house across the street from me went for sale. I'm like, God, I kind of wish I had bought that house when I had the chance. But like, there were other extenuating circumstances that, would have made that challenging. But it's easy to look back now and go, gosh, why didn't I refinance? Even, and take out some cash and maybe do some additional repairs. I mean, the house has almost been completely remodeled, but like I look back and wish I had done things a little bit differently and not procrastinated on some of that stuff.
Yeah, I wish that I would have talked to more than one lender because I think you should talk to at least 3 all the time. And I didn't take my own advice. I just went with the preferred lender that I had at the time and took that as law.
That's really common nature. So I worked for Beazer Homes for a long time, and they're very different than most home builders because they don't have an in-house lender. Most divisions have 2 or 3 preferred lenders. They want you to shop around, but the nature is to, like, you get pre-approved with one. You don't really want to have to give all your financial information over again. And so the nature is to kind of go with one. But really, I've been in a position when doing a loan where I've been able to use the good faith estimate or the loan estimate from a lender to kind of get a more competitive rate.
Yeah.
But I think it's the nature to not do that. But people really should shop around at least 3, I think.
Yeah, for sure.
Yeah.
So the second central question posed in finances is how women make less money than men. So let me just read this. This says, women homebuyers typically purchase a home as first-time buyers at a household income of $51,400 compared to single men at $64,100. While male incomes do not match that of married or unmarried couples, their higher incomes allow them more buying power than single women buyers.
That's so interesting. I think it's, and that women are more likely to, even with less income, go and buy a house. Maybe they're more concerned about financial stability or permanence.
This also says this is especially important when thinking of the recent mortgage interest rate increases and the rise in home prices. This may be one reason why the age of a single woman first-time buyer, by the way, did you already read this? Did you see this number?
I did. I'm sorry.
Okay. The median age of a single woman first-time buyer is 38.
Wow.
While men have a median age of 87. While men have a median age of 37 as first-time home buyers. And I also think we would be remiss if we did not talk about the large amount of people who are purchasing homes as unmarried couples.
Yeah.
And so
100%.
And it's not just protecting women. I mean, obviously, it's a women's issue, but it's also a man's issue. But when you're entering a legal contract on a home, it's kind of like getting married.
It really is. You're really tethering yourself to that person. And I think, again, you're very idealistic. You're going into it. You're in love. Everything is great. There's a kind of a saying, like, you don't really know somebody until you break up with them or you divorce them. And you go into it very idealistically, but it is a contract and it is like a marriage, and it's not that easy to get out of. And so I think going into it, knowing what you're getting into and having some clear lines and expectations as to what's going to happen, I think is really beneficial.
Yeah. And also, this doesn't necessarily affect women in Nevada, but in other states, if you are married to your spouse and you are not on title, that might be a problem for you. And you might want to ask your spouse to make sure that is all correct. Because even if it's not a breakup, if it's a situation where your spouse passes away unexpectedly, again, this is where you need to have the proper channels in place to be the beneficiary, to have it, immediately transferred to you.
Yeah, I've seen that happen where a spouse passes away and then the house goes into probate, and the spouse who's the decedent or this deceased person the house goes to their kids or a big portion goes to their kids. And that may not have been the intention of the person that was, the spouse.
Right. And let me explain just for a second. The probate process is an ick process because it takes in all of the debts and profits that a person has. So if I have unpaid medical debt, if I have a $20,000 credit card bill, all of those creditors are able to put their hand in the probate pot so that even if I have $150,000 equity in my house, they're taking from it. So that means that my family members, my whoever I'm leaving things to is going to get less of the proceeds of what I worked hard for, because not only, and it's not just creditors, it's the government. They're going to tax it.
Yes.
They tax an estate to a certain portion. So you're going to pay legal fees, attorney fees, and probate fees for it to go through that process. And that's why you want to avoid it.
Yeah. How much does it cost to get a trust set up?
So there are varying costs. It's a few $1,000s. I'm going to put it that way.
Okay.
I paid a little bit. I paid significantly for mine. And there are different things that you can have the attorney do during that process. But mine was pretty easy. It took about a month, and they go through asking you every single beneficiary that you would want to have a piece of your pie. And then they go on to ask, well, if those people were to pass away with you, who do you want to have a piece of the pie after that? So it's a multiple, level thing where there's just really no, I mean, unless there are a lot of lightning strikes, there's just no chance that your property
it's like ranked choice voting.
Yeah, exactly. So there's just no chance that it's going to ever go to probate because it's kept privately in a trust with the people who you trust.
Yeah. I know that they brought in somebody. I go to the Crossing in the southwest part of town, and they brought in somebody that to do trusts and wills and things like that. So there may be resources to do this where it's very cost effective or low to no cost. I don't know, but I think there might be other ways to do it too, where it's not so expensive. That might be a deterrent for some people, but I think there's probably a lot of ways to get around it.
Yeah, I think it was the best bulk of money that, I hate buying washers and dryers. I hate buying new tires, but a trust was something that I spent money on last year that I'm very grateful that I did. And, for having children also, I was a foster parent at one point. Unfortunately, family circumstances ended up that I was the guardian of my 3 younger sisters. And so the last thing that you want to happen, especially in an emergency situation, is for your children to end up at Child Haven.
Yeah.
Because that's just not even a one-day stop that any child wants to go to.
Yeah.
And so the peace of mind that I have is that, if for, some unexpected sudden circumstance, I were not to be here anymore, my children by law enforcement have like a little pass basically that says my mom had a trust. I go with this person immediately. There's no question as to, what the state of their guardianship is.
No, that's really good.
Yeah.
So, with everything that's going on with the market right now, we're really seeing interest rates kind of come up a little bit. They came back down, and we saw the market pick up quite a bit, and it was really promising. I was hearing from my lender partners that they were seeing applications on the rise. Inventory came down quite a bit, so we are down in like the 5,000 range when we were up at about 10,000 homes on the market in, I think, September, October. But I also think that we're going to start seeing more inventory come on for the spring selling season.
Yeah.
So I feel like, I'm getting a lot of people asking me questions about what they need to do to get ready to buy a house. And I feel like there's this phase that I'll call getting ready to get ready.
Yeah.
And I'm seeing people who are kind of waiting, and I'm a little concerned that they're going to miss the opportunity to get in because they haven't done the things that they need to do to be ready to be in a position to buy. So there are things like if you have a house to sell, getting your house ready, getting your financial situation in order so you can be in a position to buy. So I thought maybe we'd talk through some of those things, see if you have any tips and suggestions, and kind of see what questions people have about getting ready to be in a position to buy a home. So Because don't you think that there were a lot of people who were like on hold and waiting with everything that was going on over the last 2 years?
Oh, yeah. And I think that one thing that holds, I think, some women specifically up is credit scores. You know, I'm helping a family member right now repair credit from the birth of a child that was not covered by insurance. So that is a very, you know, specific issue for women too, is, you know, kind of what relationships in general also do to your credit. So getting credit prepared, I feel like would be the first step, because that's going to get you a better interest rate when it does come time to buy.
I think it's one of the first things that you should do. And I think a lot of people are maybe paralyzed, or maybe they don't know what to do. And there are some little things that you can do that don't have a huge impact on your score, or that don't have a huge impact on your financial situation, but can have a big impact on your score. So one of my preferred things is, you know, there's obviously, I'm not a credit professional, but having longevity in credit, but also having low balances in relation to your credit limits. And so something that you can do if you're not going to be buying immediately is reach out to the credit card companies that you have and getting your credit limits increased. So that's something that you can do, because you don't really want to have more than 30% used on a credit card. And so that goes for all your cards and also for individual cards. So if you have a card that's, you know, $5,000, you don't want to use more than a third of that, or have a balance that's more than a third of that. And then you also want to look at your overall credit. So there's a lot of little moves that you can make that will impact your credit score positively, that you can be doing 6 months or a year out from buying, or 3 months out. That will, and I think there's also price breaks, right? So you might have a 680 or 700 score, but you can get a price break if you get that score up from 719 to 720. And so those are the things that I think, talking to a good lender or a credit professional or somebody about what are the little adjustments that you can make to your credit that will help.
Well, I'm really responsible with my credit cards. So I actually put all of my monthly bills on my credit card. As many as I possibly can, because then I accumulate the rewards and I pay it off every month. But you really need to be able to trust yourself. I think if you haven't been paying off your credit card, or if you have a small personal loan or something like that that you're paying minimums on, is immediately getting to a point where you can start paying off your highest interest rate loan first, and then getting to a point where you're only putting what you're paying off completely on your credit card every month. And that will increase your credit score and also get you into a position so that when you do have a mortgage payment, that you are able to pay everything and not fall behind.
I think that's really important. But I think also, like, sometimes you can go and make certain moves, and if you don't have enough credit, and that's something I see for a lot of people who pay cash for everything, they don't have enough credit, they don't have enough credit cards or established credit to have the score that they really are deserving of.
My daughters are always like, why don't they teach this in school? And I think that's why I probably got a shit interest rate when I was 19, was because I didn't have a long credit history. And my dad did everything that he could think of, putting me on the gas card and any kind of credit card that he had. He would put me on, but even as an authorized user, you don't get the same type of,
Not anymore. Used to, because my dad had a Sears card that was like from the 70s. And so like I was like in my early 20s and I had a credit card on my credit report that was like 30 years old. And it really helped my credit a lot.
For sure.
That has changed though. Authorized users don't get the same credit boost as they used to, but it is still a way to help boost your credit if you don't, because my now ex-husband was very much pay cash for everything. He maybe had a car loan, he had no credit cards, but he didn't have a great credit score. And it was kind of a joke because he was like, you know, I'm the better credit risk. And I'm like, yeah, but you don't have a good credit score. So when we first had to buy our first house, I had to add him on as an authorized user to a bunch of cards so that he would have enough credit to be able to be on the loan. So those are the things that you're not going to know unless you go talk to a lender and have your credit run and talk to someone who knows.
Absolutely. But that's the first most important part to buying a home is you have to know how you're going to finance it. So you need to talk to a lender. We have great references. We have great referrals, and they can help you in a warm, fuzzy, layman's terms way to understand the mortgage process and what that looks like.
Well, and there's so many new things going on right now. So we've got buy downs. There's ways to get rates lowered by, you know, seller credits or, you know, buying the interest rate down. There's adjustable rate mortgages. There's assumable mortgages. I had just got a text from a client today that he was looking at a property that had an assumable mortgage listed in the listing. So there's a lot of little things that maybe sound confusing and are overwhelming, but you talk to a lender and it's going to make a lot of sense.
Yeah. I think we gave some good info away.
Yeah, I do. The only other thing I would say is, if you have a house to sell, not waiting too long to talk to a good realtor. Nikki and I, it's something that we can do and are happy to do. But really from the time that you buy the property, anytime you want to make improvements or renovations, if you're not sure, is this going to add value, or should I, because I know a lot of times someone will come to me, should I paint the house before I sell it? Should I replace this? Should I fix that? Talking to a good realtor who knows the market can tell you before you invest in something whether or not it's worth the money to put it in, or where also it could be a detractor. If you're going to go, paint your walls mustard yellow, maybe that's not the best investment if you're not going to be in the house for a really long time. So I think that's another thing too. Getting ready, further out if you have a home to sell, and having that home ready to be listed when you're ready to buy, that's something that could really hold you up in this market.
Yeah. And the component of having the two of us, I mean, we do this with each other's listings and things too, is that we give both of our perspectives, and, everybody has blind spots, and we don't lack, we wish we had no blind spots, but we don't lack them either. So, I think it's even giving like a second opinion sometimes on, well, maybe what if we virtually staged this space, or, did like offered, and we can't show this in the MLS photos, but like what renovation photos look like. You have a listing with a pool going in. So that's something that you can show renditions of the pool in the MLS, but anything that doesn't exist there as it is structurally can't be shown. But there are different ways to market the property in that way aside from the MLS that we can do, that we've collaborated on in the past. So
yeah, you had a listing last year that was a beautiful home, but it had an original kitchen.
Right.
And so we talked through it, and you went in and had it virtually renovated, and I think it sold really quickly within that. And that may be something you can't always put in the MLS, but you can have photos in the house, and it can be something that you send out to anybody that looks at it, and be really beneficial to give someone a vision, because not everybody has the ability to visualize what a house can be.
That's right. Yeah. Well, I'm glad that I hope we were able to help some people listening today. And all the single ladies, we hope you buy a house. Did we start this way in song?
Did we start this way?
with one term, single ladies, and now we're singing songs. All right. Well, thank you so much for joining us on this edition of the Ended Up in Vegas podcast. We'll see you next time.